I think the meltdown of Terra and the meltdown of Luna and the meltdown of the Wildcat exchanges, the meltdown of FTT, the meltdown of FTX, all of those has put the fragility and the defect in architecture of the crypto industry front and center.
Hey guys, welcome back to Library of Wealth. Today we have Michael Saylor giving us his take on the crash in Bitcoin. Plus we'll hear details on what happened with the collapse of FTX and where the crypto market is headed next. While many investors are hesitant to purchase cryptocurrency in such a volatile market, he believes that the SEC is going to be taking a very close look at many token and token sales taking place around this time, and how unsuspecting investors were the ones left holding the bag when the crypto tokens were dumped. Let's listen to Michael Saylor as he gives his take on the Bitcoin crash and the collapse in the market we're seeing now. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
The regulators have been rousted out of bed, to go on television to answer questions. Congress has been lit up. You're going to see every agency thinking about this. You're seeing mainstream media writing about this. The Wall Street Journal has got story after story after story after story after story. And unlike writing stories that, well, crypto is like Bitcoin except more energy efficient, that was the story a while ago. The stories now are, well, and you saw it when I was on CNBC, I said, well, BTC is not FTT. And every one of the anchors nodded and said, yeah, you got that right. It's pretty obvious why. So the meltdown of the crypto ecosystem is educating an entire generation of mainstream journalists, mainstream investors, mainstream regulators and policymakers. And they understand that now they have to do something, and the regulation that's going to come is going to stop the scams, it's going to stop the self-dealing. It's going to provide a framework by which people start to understand the difference between an ethical, economically sound, technically sound asset and a fair, equitable, principled approach. It's like the musicians, the actors, the artists, they want to monetize their brand. And they're not evil people, they're not unethical people. They're people like Prince that said, look, the music record labels hijacked my image and I'm a slave to the record labels and I want to get my brand back. And so that audience of 100,000 major creators and millions of mid-level creators, they would love to tokenize their brand, and they actually went to the crypto ecosystem to do it because you couldn't do it on the Bitcoin base layer and there was no Lightning protocol to do it. And so they brought their notoriety and their marketing cachet to the other cryptos, where then they were monetizing some unregistered security token. And so the moral hazard is to try to do a good thing in the wrong way. Giving dollars to Lebanese is a good thing. On a altcoin, right, is a bad thing. Giving a token to a celebrity or an artist is a good thing, but doing it on an unregistered security is a bad thing. Creating a digital security, like I want to spin up a security, I want to do it in a week or 2 weeks. I don't want to take $25 million up front and spend $20 million a year to maintain it, and that's the old way. That's how MicroStrategy does it. I have an army of lawyers and accountants. If you could do it quick and easy, orders of magnitude quick and easy, there's a place to create a digital security for the local bakery, a digital security for a small, mid-sized company. Why can't 1 million entrepreneurs create their own digital security and sell it? Well, right now, because they don't have $50 million, right? The barrier to entry to sell equity has been too high. So the idea is empower someone to create a digital security. But the way to do it is unethical when you do it as an unregistered security manipulated in an unregistered exchange or an unregulated exchange. I think another big part of what's going on right now is the other side of this, which is investors in the mainstream are going to understand based upon results, why a digital commodity is a better idea than a digital security. And that's happening in front of our face. I also think that regulators are going to have to move. They're going to move much faster. And as they move much faster, they're going to lay down expectations of the registration process to become a digital security, a digital currency, a digital exchange, especially those three. Those are going to be hot buttons. And as that happens, what you're going to see is that 98% of the stuff in the crypto ecosystem is going to shake out. There's going to be a few strong players that will go through the registration process, and they will grow up to be a registered, fully disclosed currency, like a Circle or a Tether will have to become registered and regulated. There may be a few digital securities. There'll be a massive fight over what that means and what you can do with it. The digital exchanges, both the crypto exchanges and the DeFi exchanges, will have to register, and this entire Wild West environment will start to dissipate. It'll be like the meteorite that hit the Earth, 80 million years ago, and a lot of stuff will get wiped out. A few things will rise out of the crypto ecosystem that'll be cleaned up, and then a lot more mainstream actors will enter this space. Mainstream investors, mainstream banks, mainstream financial providers, registered companies, and the entire industry will take on a new character. Let's talk about the moving forward. Well, first, the ideas. The crypto industry has some good ideas. One good idea is a digital commodity, the ability to move something of value point to point between 20 billion computers at the speed of light and program it with final settlement. That's a good idea. It has not nearly been fully realized. At the point when 8 billion people are swapping value back and forth, and at the point where millions, if not tens of millions of websites are swapping value back and forth at high frequency, and I mean like 100 times a second, 1,000 times a second, million times an hour, billion times an hour. When that happens, we'll have realized the potential of a digital commodity, because that is the true internet of money, money over IP. And Bitcoin is the first asset that could serve as a digital commodity, and Lightning is the first open protocol that we've seen, open, permissionless, ethical protocol that has the transaction speed to traffic digital commodity. But the other ideas, and the other ideas that the crypto industry worked on were a digital currency, and the most successful manifestation of digital currency is Tether. And the idea that people in Lebanon want some dollars, and people in Argentina want some dollars, and people in Nigeria want some dollars. And the only way you get dollars is with a credit card on a Western bank. And so for the billions of people that don't have a credit card in a Western bank, they don't get dollars. And you go to your local bank, you don't get an account. And if you do get an account, they steal your money. And if you have dollars in a bank in Argentina or in Lebanon, when the banks freeze, they will devalue your dollars, convert to local currency, and freeze it or steal it. So the second, this other big idea is digital currency moving on 8 billion Android and iPhones between 100 million websites at the speed of light. And that's a mega idea. In the near term, it's a $10 trillion idea. And the reason that people use Tron or Ethereum or any of these other networks is it was easier to move digital dollars around, and Bitcoin didn't support digital dollars on the Lightning Network. So a lot of the energy came from digital currency that we didn't support in our ecosystem.
Saylor says that even though the worst is over with, the industry hasn't yet been resolved. Because we have gone through an essential deleveraging, people will be more cautious in their purchasing of assets. We're seeing a massive drop in some of the biggest stocks in the world, but to date, Bitcoin is still up 77%. At the same time, Microstrategy stock has increased by 132% since the business initially traded debt to begin purchasing cryptocurrencies in August of 2020, exceeding numerous other equities and assets, including Bitcoin itself. Bitcoin is currently down nearly 1.5% as a result of the FTX bankruptcy, which has caused market chaos and risk-off sentiment. One thing is clear, the collateral damage from this recent crash in cryptocurrency will be felt for weeks and months to come. Many analysts believe that Bitcoin will be reaching the bottom soon at 12 to 13,000, which is a likely scenario given that there's so much panic in the crypto market right now. Major cryptocurrencies are trading in the negative as the global crypto market cap fell 2% on the previous day to 855 billion. Over the last 24 hours, total crypto market volume fell 33% to 96.7 billion. What do you guys think of Michael Saylor's opinion on the Bitcoin crash and the collapse in the market we're seeing now? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.